Good morning, good afternoon, good evening, hello, and wherever and whenever you're seeing this, hello. My name's Emily French, and it's such a sincere pleasure to be with you in this virtual digital conference. Now, I've been asked to talk today about this Black Swan event. I'm not sure if it is a Black Swan event. It's more like an entire zoo of animals, the who's who in the zoo, pick one. It's Noah's Ark. It's bigger than a person. It's bigger than a country. It's literally, how your precise actions can mean life or death for another human being. And we will come out of this, and the world will be changed. What these changes may be, I have no earthly idea, but no question that change will happen. I do hope that we come out with a greater awareness, inspired by these incredible acts of generosity and kindness we have all witnessed and experienced, and with an entire new education of what really makes the world go around. Now, there's no question that it's agriculture that makes the world go around. Global agriculture continues to do what it does best, and that is feed and nurture the world. And it's never been more important in this time of uncertainty and fear and concern. So whether it's from the production or the harvest of goods to the manufacturing and processing of these goods, and obviously the movement and transportation around the globe. In other words, you all are doing what agriculture has always done. And perhaps this time, more people will pay attention, learn, be educated as to the strength of global agriculture and its diversity and its relationships and in its community. For those of you in the front line, we are not only indebted to you, but you have our humbled respect and eternal gratitude. Now, this digital conference is a very unique platform that USEC's team developed in a fairly narrow time frame, and please join me in thanking them for this, not only for this endeavor, but in its ongoing service to the global soy complex, and in truth, for bringing us all together in this virtual reality. There is no doubt we will meet again in person, and I greatly look forward to that day. So now, until that day, you actually sit in a very rare position, and where you can mute me for the next 25 to 30 minutes and simply follow along in the slides. I'm not sure if I've ever given a speech or a presentation where I could actually be muted, so maybe that's your Black Swan event and something else to thank USEC for. So I was asked to talk about kind of the implications of the soy marketplace and the world and kind of what we're seeing. And as I looked at this, I looked at it in a lens of pre-COVID and now post-COVID. And as such, I framed my talk in that vein to discuss the general price outlook for the soy complex and some of the pre and post situations we see around the world. So slide 1, let's take a look at that. This is my market thesis, and that I return to whenever I forecast. It'll start with a spoiler alert. Again, you have the power of the mute button, so if you take anything away, we are range bound, period. Range bound, whether it's pre-COVID or post-COVID, those prices, again, have been and continue to be range bound. And there's a few reasons for this. The first 4 bullet points, first of all, demand uncertainty. That continues. Pre-COVID, we had the demand uncertainty due to the China-US trade war. Post-COVID, consumer demand is questionable. When is the return to restaurants, to air travel, etc.? So demand uncertainty is a big one. And as such, this contributes to the range-bound market we're in. The second point, to break out of this trade range, you need a supply shock. Now, not a supply dislocation or an issue with food security, but a production supply shock. Pre-COVID, vegetable oils faced the potential supply shock with the drought in palm oil, and you also had biodiesel. So it was building towards that great risk. And now, not so much, and we'll talk about that a little bit later. The third point as to why the range bound continues is the essence of keeping risk limited. This started with the US-China trade war, and it continues during COVID and likely post-COVID, in that no one wants to take any risk that they don't need to, okay? And a lot of that puts the physical trade much more in a back-to-back type trade environment, right? So you're buying beans from the US farmer or the Brazilian farmer, and you're wanting to sell those directly to the end user and not build a premium book or a basis book. So again, keeping that risk limited. Now, world importers have the luxury of having the US as the most transparent market in the world, period. And this too, this transparent market has contributed to the range-bound environment. The US, it holds 51%, 51% of the world's corn stocks without China. That is a luxury for world corn importers. It holds 18.5% of the world's wheat stocks, again without China, and it holds 13% of the world's soybeans, and that does include China. And then the final point of the slide is the implied price floor for Chicago futures, in that that is really kind of the price level where I don't have any interest being short, and I don't think the market does either. So in summary, for this slide, and the bottom line is that we are range bound with US plantings, both corn and soy and spring wheat and sorghum, likely to be much bigger, certainly corn and soybeans, not so much wheat, but certainly will be bigger than in 1920. All right, so the next 6 slides, we're going to jump right into the prices. And we're going to look at the weekly price charts and the monthly price charts for soybeans, for soy meal, and for soy oil. So slide 2 is the weekly soybean prices. As you can see, soybeans are really working around that 850, 850 versus the front month Chicago futures. It's working around that area, and the nature of the soybean, in my 24 years of doing this, what we see, especially now with the global prosperity and the dietary shifts, is that soybean prices really don't like the nature. They don't like spending much time below sub 850, below 850. So I'm kind of using that as that oscillation price line that we're revolving around. Soybean plantings will again be much bigger than last year, and I do think they'll be bigger than the 83.5 million acres from the 31st of March planting report. Funds, what do the funds do? And we'll show that in the next slide, but this is the critical factor for the outright price action in the weeks ahead. And then the bottom line, really, when you talk about soybean futures and you talk about the US ending stocks for both 1920 and 2021, it is that final number, whatever it's going to be, is absolutely predicated on what China buys or doesn't buy in the months ahead. So we'll go to the next slide. That's slide 3. This shows the monthly soybean prices. And again, you're stepping back, you're taking a wider look at these prices. This goes back to 1997. And again, we're trying to stabilize the market versus those 2009 lows. And to the price, or to the chart to the right, that is the managed money fund position in the most recent data. And what that shows is you have a pretty neutral position that the funds are holding right now in soybeans. If you look at the red line, that was the record short that we saw mid-May of last year. And that was kind of at the height of the China-US soybean trade war. So the biggest risk for soybeans right now is what funds do or don't do with that position. So be aware of the market structure. Slide 4 We'll now move to soy meal. For me, soy meal is the absolute critical leg of the complex. It has been. As goes soy meal, goes the complex. And what is most impressive about meal is that despite the flare-up of the African swine fever over the past year, whether it's in China or other countries, and also the trade war of China and the US, what's been most impressive is that soy meal never broke below that lower trade range. And we'll call that, say, 290 to 295. That is hugely important to me when we look at a post-COVID world. Okay, so you had significant demand destruction in China. It lost over 50% of its pig herd. And yet, meal did not break that lower trade range. So we have to apply this lesson to meal in this post-COVID war. So we've yo-yoed here, and we'll talk about this a little bit more when it comes to Argentina and its importance, or logistics and transportation. That becomes very important when it comes to soy meal prices. The next slide, this is slide 5. This is a look at the monthly soy meal price chart. Again, going back from 1997 to 2020. And really, it's moving sideways. But soy meal, and we've seen this in the last 3 weeks. So the price chart, when you're looking at the slide to the right, the black backdrop, what you see is the vertical move that meal makes when funds are buying or selling. The yellow arrow was the vertical move when meal prices went up $40 a ton. The red move here is the last week, where it's retraced all of that for a loss of $45 a ton. And yet, despite this fund inflow and outflow and the risk of Argentina, again, soy meal is not breaking the lower end, and it's not breaking that upper end. Testing, absolutely, but breaking, no. So again, meal range bound moving sideways, 335 to 290 on the downside. Slide 6, this will be your weekly soy oil price chart. Poor soy oil. It's been absolutely hammered price-wise since the start of 2020. And there's one thing I learned a long time ago in Kuala Lumpur, listening to Anne Frick speak, was that soy oil's nature, it's very technical in nature, and it's very anticipatory. It's forward-looking, not reactionary. And so usually what happens is soy oil will trade something that may happen 3 or 4 months from now, okay? And it trades, again, as I pointed out, very technically. And this is what's happened to veg oils, whether it's palm, soy oil, rapeseed oil, or sun oil. There was that pending tightness led by palm oil and the drought there. And so you had this massive rally in Q4 of 2019, and subsequent oil met cliff punched oil in the face, and prices plummeted. Okay, so if you look at that weekly price chart, that shows that very clearly. And you also have the funds go from a record long to now a minor short. Bean oil is down 21% year to date. If you compare that, if you look for a silver lining when you talk about oil, it's not as bad as RBOB. That's down 59%. WTI is down 62%, Brent 51.5%, so on and so forth. As well, oil share, given meal's collapse, has recovered from about 28% to now 31%. Okay, so that's the weekly oil chart. And moving to the monthly, this slide suggests, again, stepping back, despite the upward trajectory in Q4 and the subsequent decline in Q1 of 2020, really soy oil's sideways. It's going nowhere fast. and it continues to consolidate versus the lows of 2015 and the lows of mid-2007. What's impressive about this, probably more so than anything, is that biodiesel demand has been absolutely clobbered, as has ethanol. So more on this a little bit later regarding biodiesel, but the one thing to drill home on soy oil specifically is that I believe without a shadow of a doubt that soy oil is our canary in the coal mine to see signs of post-COVID consumer demand recovery. Especially in India, that's the world's largest veg oil importer. Its March soy oil imports were down 32%. February, all edible oil imports for India were down 10%. And then you look at China, the world's second largest veg oil importer, and its Jan-Feb palm oil imports were down nearly 25%, and its soy oil imports were down 13%. So you have some maybe built up demand coming from those massive population hubs of India and China, and we'll look to especially China to see what kind of consumer recovery we see in the future. So those are your price charts for soybeans, soy meal, and soy oil. Now let's move to kind of pre-COVID and post-COVID and what we're seeing. So this is a look at the general global trade assessment. You know, pre-COVID, it felt like we were coming out of the US-China trade war, you know, that hangover, we're recovering, we're moving back into kind of a we are the world, kumbaya, globalization is good again. And you know, there were all these demand hopes after the signing of the Phase 1 agreement at the White House. And many world importers that compete with China for various goods around the world, we are all checking and rechecking the balance sheets of other suppliers and where some of that product sourcing may shift. And now, in a post-COVID world, we've seen the switch, the focus switched from where these commodities are physically located and what export countries are at risk of export restrictions or food security or vulnerabilities. And that's what this chart to the right, the post-COVID food dependence. The countries in the orangish tan color, those are net importers, whereas the net exporters are in the green. And so because of post-COVID and the concern about food security and food pipelines, we've seen the market become much more sensitive to any sort of supply disruptions, whether it's an export restriction or a logistic issue. And nothing and no price chart makes this more clear than that vertical move that we saw in soy meal on the back of Argentina. Now, let's be frank, you know, when it comes to Argentina, there's always concerns, whether there's strikes, inflation, the return of La Presidenta as La Vice Presidenta and Peronist policies, so on, you know, the IMF, basic default. But this risk for Argentina this time is COVID and transportation, of which Brazil and Argentina are heavily reliant on trucks versus the more robust rail and barge system, you know, that we have in the US. So again, that global trade assessment, pre-COVID, we were feeling much better about maybe a return of normalcy, and now post-COVID, supply disruptions become a much more critical factor in assessing trade flows. Moving to slide 9. Again, world supplies. Pre-COVID, world supplies, I think, are best described as adequate and ample. It was the second largest supply cushion on record, just over 105 days. And given that there was that seemingly trade resolutions, and again, Phase 1, it was, okay, we've got these supplies, the world is consuming about 955,000 tons a day. Fantastic. There is no shortage of soybeans. Okay. But moving to a post-COVID world, suddenly it's, and moving to slide 10, suddenly it's, now where are all those exportable soy supplies? In the case that you have a problem with South America. So this slide shows where those stocks are. And when you look at this now as to where Argentina and Brazil and how they store the soybeans, and then to China and the US, what happens to that 105-day supply cushion is really, it's more like 55 to 60 days, not over 3 months, but rather about nearly 2 months. And why is that? Firstly, China stores about 23 million tons. The world will never see those soybeans again. They will stay within the country and they will be crushed, or they will be in the strategic reserves. And that 23 million tons is based on an import number of 89 million tons. The reality is that number is probably closer to 91 or 92 million tons. So again, going back, if the world consumes nearly 1 million tons of soybeans every day, you've got to subtract another 2 or 3 days from the supply cushion. So that's China. Now you have to look at Argentina, and Argentina obviously exports very few soybeans. They account for 5% of world soybean trade. They're also, if you look on paper, again, using USDA's April WASDE, because it's very transparent, and the marketing year ending the 31st of August, Argentina actually stores the most soybeans in the world, and that's about 28% of the world's soybean stocks are in Argentina. So if you back out Argentina's role in the soybean market, really Argentina, that's only about 7 or 8 days, with the remainder of all the world's soybeans in Brazil and then the US. So what we're looking at now is, again, where are those soybeans? And more importantly, when you look at 2021 and the alleged phase 1 commitments by China for US soybeans, what we're going to see likely, again, if they adhere to those commitments, is that you're going to see a big shift from US storing soybeans to China storing soybeans. So the risk there as a world importer is that China will be carrying more of the world's soy stocks, and those soy stocks will not likely be re-exported. So moving to slide 11, again, following on this idea of where are all these commodities suddenly when we face a post-COVID world, let's look at how the 3 major exporters, the US, Brazil, and Argentina, how they utilize their crops, again, given COVID and transportation risks. So the first country we'll look at is the US, and its production will recover in 2021 based on higher plantings and higher production. It will recover somewhat of the 27 million tons of production it lost last year. In other words, it will return to that role of supplying about 30 to 35% of the world's soybeans. The middle graph are US exports. The gray line is a percent of world trade, and the orange line is the utilization of its own production. So when you look at US exports, that demand accounts for about 50% of US production. So it ranges 40 to 50%, again, depending on the size of that production. And the US exports are influenced by 2 major factors. 1, China, and 2, Brazil, and what it produces or doesn't produce. And then you move to the third chart, and that's the US crush. The US crush represents about 20%, that's the gray line, about 20% of world crush. And this year, it will have a record crush, given the margin environment there, and it'll consume about 50 to 60% of the crop for crush. So exports and crush, when you talk about the US production, they basically account for a split there. Looking at Brazil, same exercise. The first graph is production. It's increased from 40 million tons in 2000 to probably 124 million tons for this year. And record plantings are expected for 2021, given the record prices currently being paid on the collapse of the real, which is down about 32% to date. Moving to the middle one, Brazil. Again, the orange line being percent of its own production, the gray line being world trade. Brazil accounts for 50% of world soybean export trade, and it utilizes about 60% of its crop for exports. Brazil crush, again, basic rule of thumb there is it accounts for about 15% of world crush, but as Brazil's production gets bigger, the percent of that crop used for crush declines, okay? And so it's about 35% is how Brazil utilizes its crop. Brazil will be, when you look at exports and world trade flows, it really will be the key during the periods of February through August on a calendar year basis. And then moving to Argentina, pretty simple. Its soy production accounts for about 15% of the world. It utilizes, well, it accounts for 5% of world soybean trade. So most of that soybean is used in its domestic industry, okay? So the soy crop, 80% of Argentina's soy crop is used for crush, okay? And its crush sector accounts for 10 to 11% of the world's crush. Okay, so we've talked about where these soybeans are located, how they're utilized, again, in a post-COVID world where logistics become much more important, as does the phase one buying commitments of China. Now let's look at soy oil. So slide 14 is a look at that, in that soy oil, we've talked about it before, but the edible oil, it was the price puke fest of 2020. The chart on the left shows that decline, precipitous decline, as prices fell off the cliff. But I do think, and it dropped over 1,000 points from the 1st of January to the early part of March. That is incredible. But moving into post-COVID world, again, this is the critical gauge for me, the most visual aspect of it for the consumer recovery. Soy oil for food use, right now it's projected to actually still increase 1.4% versus last year, and it accounts for about 81% of total demand for soy oil. And looking over to the far right is a look at the soy oil supply cushion, and that's at 26.5 days. So you're at multi-year lows when you talk about soy oil. Pre-COVID, again, talking about soy oil, pre-COVID, there was this enthusiasm and excitement of renewable fuels. Renewable fuels were the future. It was go green, save the climate, be green. And the graph on the left shows this lower left to upper right, beautiful growth for the industrial demand for that. And it went from accounting for about 3% of total demand to about 19%, 19, for this year. Post-COVID, now we have to ask ourselves, energy demand. What energy demand? The number of airplanes flying diminished. U.S. gas demand, it's down 50% versus this time last year. That's the graph to the right. What does the market do when the consumer starts asking themselves, having clean skies, this is pretty fantastic. Being able to see the Himalayas for the first time, not all bad. The conversations around the breakfast, lunch, and dinner table, because we're all, staying at home, it revolves around, do we need a car? Do we need to be driving? How much money is being saved? So I think that's a very real discussion that will look much different in a post-COVID world. So that's kind of that pre and post for soy oil. Let's go to slide 16. and talk about protein meal demand. So in a pre-COVID world, we were very concerned about African swine fever, and the challenges that presented. The world market was moving through that, whether again that was in China or other countries. African swine fever presented a massive demand headwind for the market. Coming out of that again was the fact that still, despite this major demand headwind of African swine fever, the global meal supply cushion is just over 16 days, 1/6. And that sort of leads to why the meal market can get so volatile if there's an issue in Argentina. But those 16 days, that's the smallest supply cushion since that 2008-2010 period. Okay, so let's be very aware of this. And again, that was as there was demand destruction already, okay, already. And based on the April WASD USDA numbers, global meal demand, despite African swine fever, and so far despite COVID, is forecast to be 2.7% or up 2.7% on the year. So this is pre-COVID. Going to the next slide, post-COVID. And post-COVID, it is who else exports meal and what is the hit to the consumer protein demand. So the risk, and I've already talked about this, so I don't want to belabor the point, but the risk is Argentina. Soy meal was that first grains and oilseed commodity to really rock the markets in this post-COVID world that we're being in. So if you look at, just to keep this in mind, if the world meal exports, every day, if export trade was perfect, the world is moving 183,000 metric tons. Okay, that's based on world export trade of 66.7 million tons, which is actually flat to declining versus last year. But 183,000 metric tons every day if trade was perfect or static. And to illustrate Argentina and its role, rather than a percentage basis, of those 183,000 tons, Argentina accounts for 80,000 of those 183. So in a post-COVID world, given Argentina's importance, we have to look at who else exports meal and how is that meal utilized. So these three graphs show Argentina, Brazil's in the middle, and then the US. So on the left, Argentina exports about 90%. So 90% of the meal that Argentina makes is put on a boat and shipped around the world. So that's to say that you as a world meal importer, you really don't face a domestic competitor for the meal that Argentina produces. Moving over to Brazil, the blue line is domestic consumption. And it's gone from 40% of the total demand for Brazilian meal to about 55% in the period from 2000 to now. Ergo, there's plenty of competition, pulls and pushes when it comes to the domestic market versus the export market in Brazil. And finally, the US. So if you look at the US, its export profile is much smaller when compared to Argentina or Brazil, and it consumes much more of its meal domestically. About 72 to 74% of the meal that it produces is consumed domestically. Now, in the post-COVID world, you've got another wrench that's being thrown in the meal market. And that is the absolute implosion or collapse of the US ethanol sector. And it was, remembering that corn ethanol demand, this has been the huge growth engine for US corn since 2005 until recently. The question, now looking at protein meal, is what is the impact on DDG consumption, distillers dried grain, and where does this demand go? Where does it shift to? Does it shift to more corn, to more wheat, to more meal, etc.? So these two charts on the slide, the left is the weekly EIA ethanol production. The red line shows the production cliff that ethanol has gone off of. And to the right is distillers dry grain supply and use, and how that is. So you've got the production being the red line that shows how much DDG was being produced from ethanol. The orange line is the feed and residual use, and then the blue line is the export. And the export and the feed and residual will be very interesting to see how that supply gap is bridged. You know, is it, again, more corn, but you also need energy. So there's going to be some sort of protein meal demand there, whether it's in the form of soy meal or otherwise. Given this current price relationship, if you look at meal versus corn, it does favor corn, but again, protein is going to be needed. The big question probably for corn is actually how cheap does corn get versus everything else. You have historically wide spreads between corn and wheat. And again, how cheap does it get if US ending stocks for 2021 trend towards, say, 4 billion bushels rather than 3.5. So you have a big supply push likely happening in the corn market in the weeks and months ahead. Let's look at world export trade, pre-COVID and post-COVID. So pre-COVID, world export trade was driven by China and its import demands, where it was sourcing soybeans, and obviously the phase one China-US commitments. So to look at that, I think right now, well, we'll talk about post-COVID, but pre-COVID, China was the determinant factor, okay? And really, when you look at that, we've got world trade, despite COVID, to still increase about 2.2%. That is, again, if trade was perfect, the world would be exporting 416,000 metric tons every day. And again, remember, we consume 955,000 tons. So when you talk about the importance of world soybean trade, it accounts for 44% of that daily consumption. So that is a critical aspect for world soybean prices as well. Moving to a post-COVID world, again, China was the driver pre-COVID. Post-COVID, it's the utter collapse of the real versus the US dollar. This has been, in this post-COVID world, we're really seeing currency drive trade, not only in soybeans, but in wheat as well. The real USD is down 32% on the year. The Brazilian farmer is receiving record prices for this year and next year's crop. They've been selling it as well. So until there's a recovery in the real USD relationship, it will be the Brazilian farmer selling that will largely dominate and set the tone for world trade. Okay, so remembering that in this pre and post-COVID, world importers, we've been trying to minimize or control whatever risk that could be. And one such control has been the back-to-back business rather than building a premium or a basis book. So this continues to be kind of the driver in the physical trade flow space. So again, pre-COVID, driven by China, post-COVID, so far driven by the Brazilian currency and what the farmers are doing there. So this is my final slide. This is a look at the US soybean balance sheet, slide number 22. This is my first look at 2021. Again, I think planted area will be much higher at 86 million acres. Again, just the absolute destruction, demand destruction from corn should push more demand to soybeans, as well as you have the soybean, the hope of China demand in 2021. But net sum, I've got probably for 1920, ending stocks at 500 million bushels. USDA took that to 480 in the April WASDE that was out on Thursday. And for right now, I'm using 455 million bushels for 2021. The absolute key, besides weather, and yield, will be what does China import? What does China import from the U.S., adhering to those phase one commitments? That's really going to drive physical trade flows starting September forward. So we'll see. I think the point to weather, the struggle will be is every time the funds, and remember, I think the funds, what they buy or sell, that money inflow or outflow will be very influential in the weeks ahead. They've tried to trade a weather risk premium or a U.S. production problem, both in 2017 and again last year, and were completely burned in doing so. So I don't see the market really chasing a weather rally. I see the market trading or chasing food security headlines, but I don't see them really going after the production risk that may or may not happen in the U.S. All right, so in conclusion, this is what I have for you today on the markets. I'd offer the following in closing. As we move through COVID, the value of a day has never been more evident. The value of relationships, of clear and concise communication, and transparency has never been more evident. The value of free and reciprocal trade has never been more evident. The value of agriculture and its food systems, in addition to the world healthcare system, has never been more evident. The very fact that COVID cares not of country or nationality, race, creed, color, religion, sex, height, weight, age, has never been more evident. So stay well, stay healthy, give thanks and give support. Reach out because we're all in this together. And I'd like to end with a special, just a moment of thanks to Carol Brookins. Many of you may have known Carol at her World Perspectives Days, at the executive director for the World Bank and many other things. She passed away as a result of COVID-19. And I'm sure many of you have stories about Carol. For myself, I'll always remember is that she took time. And she was such a huge proponent of U.S. agriculture and trade. Regardless of when I was at the start of my career or worked at World Perspectives, although she'd already gone to the World Bank, to the years that followed at various conferences or dinners in DC or New York. The way she viewed and experienced the world and how she could relate so many things that you wouldn't have thought were relatable. How she could take very complex thoughts and make them applicable and straightforward. To say that she was ahead of her time doesn't seem enough, so I can only hope that I bring a bit of Carol's unintentional teachings with me around the world. And remember, take time and take that moment with all of you. Until we see each other again, thank you.